Good morning, traders. Here's a short video I put together. Somebody requested me to show them how to quickly scalp the market or trade the market. So there's two trading styles that everybody knows about, is the long-term and short-term scalping. So if you want quick profits, you usually trade larger lot sizes because you're in and out quickly, and if you're wrong, you get out right away. So this is the basic strategy. So let me clear everything off so I can start from scratch here, show you guys how to set up the chart. So this is candle charts. Line charts, they have a purpose. I can cover that in another video, but most people use candlestick charting, and this is a whole new different lesson on how to interpret the different the way they look and the different setups. So anyway, what I like to do first of all is insert the indicators, trend, moving average, period is 200, method, exponential, and I like the color red because it looks good on the black background. Another indicator is the Bollinger Band right here, and I go with this is a default setting for Bollinger Bands, but if yours doesn't come up that way, you can change it to 20, 2.5 deviation, and color. So for scalping, I don't like the 1 minute because you can get crazy action, so I use the 5 minutes. So this is the basic system here, is you trade in the direction of the 200 EMA. So what that means is the price action, all the candles are below the 200 EMA, then you're gonna look for shorts. If the price or the candles are above the 200, then you look to go long. So this is how it works here. What you want to do is, let's say for shorts, you're gonna look for the opposite price action. So if the candles touch the upper band, you look for the next engulfing. Here it didn't quite touch, but close enough. So you would trade short only if after this bullish candle here is followed by a bearish candle that closes at least halfway. So halfway of this bullish candle right here is about here. So if this negative candle closes, if you get a bearish candle after a bullish candle and very close to the upper band, then you short here. And then you get out if you see a bullish candle after it touches the bottom band. So in this case here, you would have entered here and you saw this bullish candle. So you got 3.6 pips. And then you get in again. Well, the advanced method is if you find it that it breaks support here, you see like there's a few candles that didn't quite make it, so then you get in after. You can put up a stop buy order if prices reaches below this wick right here. So you would have gotten another 2 pips. Let's see. So here, this touched the upper band below the 200, so we're looking for shorts. And if you know candlestick, this is I think they call it a shooting star because it went up back down. So you would enter at the close of this candle, and the aim is to hopefully reach the bottom part of the band. But if you see like 1 or 2 positive candles the other way, then get out. So here we got maybe 3 pips. So, but this the difference between the bid and ask will probably eat up all of that. So this would probably be a break even. So let's look for another example. Here, touch the upper, close lower, and you got 8 pips. You can always, you know, get out whenever you can. So this is not really a positive candle, so you keep writing it. Another positive candle right here. It's 10 pips right there. And if you really want a high risk trade, you can do it. You can work the same thing outside on the middle line here, which is a moving average. So you can take this trade short right here. Remember, you gotta always, that's like 13 pips right there. Let's look at one that didn't work, like this one here. This one didn't work. So touch the upper band, we're below the 200. We take a trade here. As soon as you take it, it goes against you. Oh, here you go. That's touched the upper band again. So we got 4 pips lost plus the difference between the ask and the bid price. So we probably lost 6 pips on this. So of course, not every single trade will be a winner. Here too is, you might have, didn't really touch the upper band, but a good stop loss point is you gotta give it some room to breathe. So whatever this, the high of this candle, maybe give it a few more pips, like 3 or 4 pips. So your stop loss would be around here. Let's say 5 pips. So this one here would have been a great trade if you can take a little bit of heat, you know, going against you. And then I'm not going to say you got out here because you don't know what's going to happen, right? It's easy to say after the fact, but while you're trading, and if you see such a big candle, I would have probably gotten out here for 26 pips. That's awesome. It's like in 8 candles, 40 minutes. That's a lot of profit. So anyways, that's in general, that's how you scalp, or this is how I scalp. So of course, not all of them will be winners. This one you'll be holding on for a long time. Probably get out at a small loss when you see this. So you got in here. Let's see, where was I? Yeah. So you got in here and you held it for this. It touched here, 3 pips. So this is like a break even. But it's not the lower band, so you stay on, and then this might have scared you off. And it finally touched the lower band here, 5 pips. So I hope that helps. Let me know if you have any questions, or if you want me to do more videos. And I believe this can actually work on longer time frame too, but I don't like to use this method. I have other methods. So you can experiment yourself, and let me know if you have any questions. Thank you.